Hi, good evening, ladies and gentlemen. This is Manoj Attri, your host for tonight. I'm a realtor with Remax Hallmark. And first of all, a big Happy New Year to all of you. Thank you for joining. And we are now back after almost a month. So we'll have to catch up a few things and then we will take it from there. I also have our mortgage expert with me today. So let's get a hi from him and then we will try to get the whole thing started. Hi, Faisal.
Hello, sir.
Happy New Year to you.
Happy New Year to you as well and all our audience.
Yes, absolutely. It's been more than a month. I mean, like our last webinar was on 17th of December. So it's been quite a vacation. And we have few new things to update our audience today. So that is where we are. Let's have two words from you and then I will try to get back on the webinar.
From what I see from your agenda, it's a jam-packed day. So, yeah, it's all good information, amazing information, things that will change.
Yes, it is. It's going to be that way. Wonderful. Yes. So I'll take it from there and let's get started with the agenda of the day first. Okay, so let's have, again, ladies and gentlemen, we are back with our webinars and thank you for joining. And let's see, let me walk you through for the agenda of the day and then we'll take it to the next step there. Okay, so the first thing here is that I generally start with my real estate monologue, and what we are trying to see in my real estate monologue for today is we're going to check it out. How are things looking in 2019 and how has been the year 2018? We'll have a brief look out on that particular aspect of it and what is there for the coming whole year so that we can plan accordingly. So I'll go through some 3-4 articles there and that will constitute our real estate monologue. Next, as you all know, we were working on a workshop on understanding credit report and score from our last webinar, and we had covered more than half of it. In today's webinar, we'll be covering the balance half of it, and that will conclude the session completely. Then again, we will get our mortgage expert to give his review of the articles that we are going through. And next, we will also take long and hard look at the credit report and score with him and trying to understand some of the intricacies of the credit report and score there. And then at the end, I will give you what we are going to do next week, and that will formulate our today's agenda. So let's get started and with our monologue today, and we will get back to the credit score and report workshop number 2 as we go along. Okay, so let me get to the important aspect of it, and that would be the monologue. Now, this is the first article that I've picked, and it states, there are reasons to be optimistic about real estate in 2019. Okay, now let's see what this article is entailing and why we need to be slightly optimistic. The article says, as long as there is no major economic shock, housing market could see slight growth in prices and sales. and that is where I am trying to reflect from a real estate point of view. The mortgage broker will give his insight from the mortgage part of it. And we have seen that the supply has gone down in the entire 2018. I mean, I'll take you back again. We saw a tremendous growth in 2016 and 27 as far as the prices were concerned, almost to an extent that they went up to 32-33% increase in those 2 years. Last year, it had settled down a bit with the mortgage stress test and other factors with the interest rates rise and things like that. So basically, there was a dampener in the market. The sales have gone down, but the prices did not go down. I mean, the general rule used to be, we used to have 4-5% increase every year. So that outrageous 32-33% has gone down, and we have now come up into the regular rhythm of things, which is like 4-5% increase every year. So, but the supply has gone down tremendously because of some of the factors, and we are going to discuss some of those factors today. So now, as again with this particular article, it says, as long as there is no major economic shock, the slight growth in prices, and that is what I mean, the normalcy of the year by year will remain there. Again, they are also talking in the same language which we can comprehend, which is going on in the market at the moment. Okay, let's dwell further. The mortgage stress test was perhaps the most influential policy change that affected home buyers in 2018. But obvious, this was the major factor that came into effect. Everyone cannot now qualify for a mortgage. I mean, because of the stress test, what you used to be qualified earlier, now you have your income level is not there, and the prices have increased. So you got affected from both those angles. One angle is that the supply went down so that the prices of the properties went up, and your buying power became less because of the stress test. So this was the major effect was put in by the government, and it came into it took it toll there. So now let's see a few more stuff that has been said by this. I'm going through some of the highlighted portions. This is a very good article written regarding this particular stuff. CMHC expects sales transacting through MLS system to be less than 500 in 2019. So it is not going to go crazy, and the CMHC expects that things will remain under slight control there. Less than 500,000 in the sales transacting there. Now, we believe Montreal is likely to benefit from growing interest rates by foreign-based buyers in 2019. Let me explain it to you why. And that is one of the biggest changes that they are predicting, is because unlike Toronto and Vancouver, Montreal has not yet imposed a tax on foreign buyers. So that is one of the reasons the foreign buyers, though last time in some of our webinars, we had figured that there was not much of an effect by foreign buyers, but whatever is a small effect or anything has to be, they are saying that Montreal will be getting much more benefit than Toronto and Vancouver, because there is no tax on foreign buyers. CMHC expects a decline in rental vacancy rates in Montreal resulting from higher demand because of in-migration and favorable economic conditions. Okay, so now I'm going to dwell further on this rental in my one or two other articles that we are going to touch base on. That not only mortgage stress test, there were some other factors, and that is what we have to now comprehend, where things are and where they are going. And some of these things you have to have a bigger picture whenever you are dealing in real estate in Toronto or the GTA. So that brings us to like in all, we are cautiously optimistic for Canadian housing markets in 2019. At the same time, we are mindful of the concerns about the housing market in the US. And we have seen from various number of years that the US housing affects us. So that is also one of the other factors which you should be keeping a close eye on. So some of these factors. So now let's go through again. US housing, whatever happens there, mortgage stress test, interest rates, rental, supply and demand, and now we are like getting into the normalcy of year by year and the craziness of 2016 and 2017. So those are the bigger picture of whenever you're dealing in real estate, you have to be able to conceive and comprehend there. Now, let's dwell, because thus we remain cautiously optimistic about the future of real estate in 2019 in the Toronto and the GTA area, and in Canada, in overall Canadian housing market. Okay, let's take it over to our expert here, and let's see what he has to add on to with this particular first article there. Faisal sir, you're on board. Go ahead.
Interesting article, actually. Very interesting. One thing that stands out for me is the real estate hike that CMHC and the insurers that are predicting. Much less of prediction than what it was in 2017, even actually less than what it was in 2018. But steady growth. It does not say plummet. It does not say stagnant. It still says growth.
Yes,
which is one aspect that I'm when in the buyer's market or a seller's market, both of them are always looking for a steady / rising real estate market.
Yes. The basic thing here is because, see, whenever like we are dealing with clients and or in general public, whenever we are talking about real estate, this question keeps on coming. Are we doomed going? But the main thing here is this is what from the way that we are showing people there, the supply is not there. The listings are not there. So even if there is a dampener of the mortgage stress test and the interest rate, the supply, because of the less of the supply, things are balancing it out. The craziness of 16 and 17, 32, 33% interest increase in the prices of the properties, that has like taken the normalcy course. So I expect, but the main thing here is that this is what I am in real estate, whatever we are figuring it out here is, you cannot buy in Toronto these days. So now only the outskirts are left. The suburbs are left. And even there, let's see how it unfolds, because the qualifications are less and the supply is very less. So that's keeping the pace of the market still high. I mean, prices, I'm not seeing drastic decline in the prices of the properties.
My take on it is, one, there will not be a decline. There may be stable, but and that would be my most conservative answer. In general, I expect a bit of hike year after year.
I visualize that. I mean, I don't see a complete decline. I don't see that.
No,
We are not seeing that trend at all at this moment.
absolutely. We're way, I don't see that even possible. That's how confident I am on it.
Yes, yes, I think so. So we are both on the same page, and even some of these articles are giving us the same headway. Okay, let's head over to the second article, which you'll find very interesting too. Okay, now report blames Airbnb for Toronto vacancy rate. Now, like, as real estate agents, as we are in the field, we like see the rental market has taken a toll here. I have said this in my various webinars. A few friends of mine or clients, whenever we are going and showing properties even for rental, they have spiked drastically. And that all has happened in the last 3 years now. And we were also trying to figure it out exactly. I mean, and that rental market has also pushed the real estate market higher. The supply and demand also, one of the factors was also rental. You are trying to go and look for a rental, it's not easy to find. Even like I have seen, whenever I have done a rental listing, we have found multiple offer situations in a rental listing. People are like, even for a simple condo, there are multiple listings there. And one of the reasons here, when you go through this article here, is that Airbnb has contributed to this particular effect. So let's see what this report says. A new report says Toronto could achieve a healthy vacancy rate if Airbnb properties are delisted and turned into a long-term rentals. So this is one of the factors which has also contributed in fueling the rental market. I triple checked with the chief planner. We need 5,032 new rental units to get back to a healthy vacancy rate. Joe Cressy, City Councillor for Downtown Ward of Spadina, Fort York, told the Globe and Mail. That is where people are going for short-term rental. They are making more money with this short-term rentals, and that has taken the rental market into another higher trend there with the rentals of even condos. Downtown core has increased the value of the rental units, and other properties are getting affected. Even the real estate is getting affected because of this. We could achieve that target tomorrow if Airbnb simply delisted those 6,500 units, which are designed and built units for housing but used for a different purpose. This is where the problem, there is a problem lying. So till the time these things are getting resolved, this trend of we need some semblance to purchasing real estate. And because of some of these high-tech formats which have come in over, things have changed in the past 2-3 years. So these are some of the things that are bringing difference in our real estate here. And so that's why this is important to understand in context to the whole picture. The report is lobbying for Ontario-wide regulations on short-term rentals to combat affordability and supply constraints that hobble the city of Toronto. In particular, the report deduced that Airbnb's listing rose to 19,255 in December, almost 33% of which are secondary residences removed from Toronto's long-term supply of housing. So this is where one of our main problems is also lying. And if there is some reduction in this one, this could bring some semblance to the prices in the real estate also. Given that Toronto suffers from one of the lowest vacancy rates in the country, currently 1.1%, returning even a fraction of these homes to the city's housing market would make a difference to thousands of families seeking permanent homes in Toronto, said the report. So this is important for us to understand, that these outside forces, and that's where market is changing, various things are changing, and this is some of the factors which are also contributing to the real estate and the format of it. Let's head to our expert there and let him also give us some insight into this particular one. Go ahead, Faisal. What do you say about this Airbnb article format highlight?
Sir, the way I look at it, with the recent changes that have come through in the rental market, of course, landlords are looking for short-term rentals, Airbnb, and anything that is besides long-term rental, because it gets them in a policy where the rent cannot be increased more than certain amount, and that certain amount of percentage does not really keep up with the inflation on everything else, like utilities, change in rates, so on and so forth. So it essentially, the way I see it is, the recent policies of rental have actually pushed the landlords to look at alternate options. And it's definitely lucrative with the fact that they don't have long-term obligations.
Yes, that is what I mean. See, we as professionals, we have to understand what exactly, I mean, like what's all are the factors which are playing in the market. And when I was going through this, I mean, like, see, in our like entire last year, we were harping on rentals have increased like crazy. And we had to figure it out, what exactly, I mean, because of the rentals, short-term rentals, and I think so there, I was going, listening, there is something going on, like Airbnb may need to be, like governed in some format or the other, in order to, because they need to get some of these units out from Airbnb, so that, like the some semblance can be brought back into the market. And I think so we may see that in the year 2019. So go ahead.
The way I see it is, I look at Airbnb very comparable to Uber.
Absolutely.
Now, it's a business that is very hard to control. Now, and there's already some things put in place. For instance, I'm not sure last year or the year before, one of the two, where Airbnb used to be able to rent basements. And that stopped last year. Like last half of last year, for sure, I knew that the basements cannot be rented in Airbnb. Below ground level. That was the policy implemented by Airbnb.
Okay.
So that changed certain things. But at the end of the day, because I have several clients that, you've seen some of the clients that rent Airbnb.
Yes.
And they make equal.
They make even better. They make even better than the rental market. Yes.
Most times what I see is, being a landlord, the person renting the space is there about 75% of the time, paying almost the same as a tenant would, or maybe more. So vacancy is less.
Yes.
And profit is same or more.
Yep.
Now that equals to being lucrative for the landlord.
Yes. Okay, let's head to the next part of the article. Okay, now let me walk you through why I am walking you through this particular one. High cost of housing sparks exodus from Vancouver. So this is the report coming from West Canada, and I'll just read on the first paragraph here, not dwelling too much into it. So you can see like and similar things we can grasp here, that even Toronto now people are moving out in the suburbs in a similar format. So that's the only reason I am walking you through this. Ian Reeve and his wife moved from rental home to rental home in Vancouver, but their final solution for secure housing was to move to Ottawa and buy 2 houses, one for them and another for his parents. So they are moving all the way from Vancouver to Ottawa. Similarly, Vancouver has becoming very difficult to afford. They wanted to start a family, but they could not afford to buy in the city. So that is the report coming from the West Toronto. The rental market did not have stability. We both had settled into pretty good first jobs, but as much as we loved the city and had these connections, it was not worth it. They were kicked out of few places in 3 years through no fault of their own, he said, adding that it was because people were selling or flipping properties. So that's the report coming to you from there. And now let me now touch base with one of the last aspects on my monologue regarding the interest rates. And let's see where the interest rates would be and how they'll be in the year 2019. The Bank of Canada's decision last week to retain its trend-setting interest rate at 1.75% is indicative of the institution's cautious stance that will keep rates flat until at least next year, according to a money manager. So this is the inference coming from various people here, that they will hold on to this particular rate. And I will also dwell into the second article, giving like there is a major chance that this may stick there, and we'll take our experts' opinion about that one too. The central bank will most likely refrain from further hikes given increased market volatility and more restrictive financial conditions. So from the articles or the general information coming, that interest rate might remain flat until the next year. So that is the information coming to us. Now let's read one more article. And why do people think that this may be the reason? Bank of Canada expects surge of bankruptcies. Now let's see what is going on here. The Bank of Canada may not have raised its benchmark rate last week, but when it does, and it will, expect a rise in bankruptcies too. So this is something that is going on behind the scenes. So I just wanted to highlight some of the things that are going on behind the scenes here. We are actually aware that our decisions affect everybody. They affect the financial well-being of everybody, and many Canadians are carrying a high debt load, Bank of Canada Governor Stephen Poloz told reporters last week. And so he is aware of the bankruptcies. On bankruptcy statistics, I understand they have picked up, said Poloz. My understanding of the data points is that they have picked up from an extraordinary low level. So there is, in any point in time, always a certain number of unfortunate folks who may lose their job or what have you and go through this process. So this is also at the back of these interest rates, and they getting held up at that one, that they have to consider like this may take another toll there in case if this goes through. Let's head over to our expert and see what he has to say about this particular one. What are you take the inference from these two information coming to us?
Um, Raising interest rates definitely brings some pressure, and the pressure is ultimately the rate is one number, but it reflects in the payments. Increase in the payments of lines of credit, because most of the lines of credits are variable. Credit cards are standard, but lines of credit are one. And there are loan payments that are variable, so on and so forth. Some variable mortgages, uh, payment increase, cash flow reduced. Of course, it will lead to either consumer proposal or bankruptcies. And both of them are not good on financial well-being of us in general, which Mr. Pelosi is sort of pointing out. But at the same time, raising interest rate is also necessary. So I do see a very good, it's almost two sides of a coin, and you have to take both, because you're doing, your action affects both at the same time.
In your experience in the past 1 year, from these two times that the rate has increased, have you seen any more information on bankruptcies, or how, has it increased, or it has remained the same, or it has gone down?
In my general opinion, it would be hard for me to say yes,
I know.
but
Yes.
we are also, I have to say, I'm getting more calls on credit repair and overly extended debt and so on and so forth.
Okay. Now, at this point, yes, we are about to go into our workshop. Yes. So let's highlight to our audience today that Faisal has put together an associate in complete with the expertise for credit repair. And so if you have anything, and we are seeing some very good results coming from your end for credit repair, and these are awesome, and you're helping them out with the reestablishment and also consolidating some of their credit cards, which the information is coming out is very, very good for the clients, and they will help them to procure a mortgage much more easily. So kudos to you for putting this team together for the 2019 for all the clients.
Thank you. In 2018, I was juggling between doing multiple things, and credit repair needs a special focus, special attention, and it's a difficult process. It's a challenging process where you're working with the client, but you're also working with the lender, and you're working with the debt collector. So I've realized last year after our conversation that it is something our clients do need from time to time. For instance, the recent client, I cannot take the name here, but the recent client we have dealt with, father and daughter seems to be perfect, versus mother has some issues from the past, and that needs some solution. Now, altogether, they're good to buy a property, but they have, because mother's credit is not perfect, we need to work on that first. And surprisingly, I mean, it's hard work to our new associate that has put all her efforts in, and under my supervision, of course. And we've got to a point where we not just were able to take the complete interest off, we're also able to take about 25% off from the principal.
Awesome. This is awesome. So,
and on top, we were able to get them approved for a credit card.
Oh, wonderful. So they are en route to procuring a property now.
Yeah, in couple of months, we should be able to get them something that they can afford and like. So it's a step 1 to step 2, where it's been put together. So in summary, Yes, there is an associate that is well trained in process and have started working exclusively on credit repair under my supervision, and we're heading to a different start for 2019.
Awesome. Okay, so now let's get back to our main agenda today, and let's go there. Okay, so we are now completing the second part of our workshop, credit score and report. We had dwelt. Let's give you a background here so that you understand where we are going. We were doing CMHC's home buying step by step, and we had completed chapter number 3 there, and then we deviated on the basis of that step by step for credit score and report, and that took us to the understanding of credit score and report, and then took us to the workshop. And now we are now at the second leg of our workshop, and which we should be able to complete very fast today, and that will conclude our information on credit score and report. And from next week onwards, we'll be back on step number 4 for home buying step by step. And so let's get started with the steps here. Okay, now it will be, we are picking it up right from the in between, so we'll try to explain as much as possible. Always make payments on time and in full. So these are some of the tips that were being suggested on this particular workshop, and so we are picking it up from in between, and in case if you need to have more idea, you may have to refer our last webinar, and wherever it concludes, we are taking it over from that angle. So let's head here, and you should be able to get some brief idea about these credit reports and scores. If you cannot pay in full, make at least the minimum payments. We are talking about credit cards, and that is what are the tips, and that is what is the suggestion by the workshop. If you cannot make the minimum payment, contact the lender right away. So some of the things: make your payments on time and in full, and at least make the minimum payment. Even if you cannot make the minimum payment, then contact the lender. Ask if you can make a special arrangement to pay off the debt. And before we go there, let's head back to our expert there and seek his information on this particular one. Okay, so Faisal, 3 things.
Yes.
That is what I mean. How much do you think the lenders are acceptable to if you have to make a special arrangement with them?
Lenders are accepted, like they accept your special arrangements. However, those special arrangements still take a toll. What I mean by that is your credit report still reflects. The lender will accommodate. At times they will, negotiate on the rate or the monthly payment. But it's overall, if you ask me, it's not a good thing. Unless it is an emergency and you absolutely have no other choice. It's almost like a worst case scenario. I would suggest that at least make minimum or slightly above that minimum payment to keep your credit in good standing until you can go back to full payments.
Okay, so basically the advice would be try to keep with the minimum payment. Don't try to go for the special arrangement until and unless it is it's a worst case scenario.
Yeah, it's a worst case scenario. I mean, lenders will try to accommodate, but that's on an exception. Something lenders will realize, if you have to use another special arrangement at some point in life again, it will be brought up that there was a special arrangement so many years ago and so on. So I recommend minimum or a little bit above as a payment to continue until the client can pay in full.
But in your experience, you have seen people seeking this particular one, and our lenders
Lenders are reciprocating the fact. Yes.
Okay. So there is some sense in there. It's not
Yes.
like it's a completely gone case.
No.
Okay. Now, available credit. That is the total of the credit limits for all your credit products. And even last time they had told us not to use the whole thing. Use a large percentage of your available credit, the greater list and the lower score. So if you try to use the entire amount of your credit, you are at a greater risk, and it will your score may go lower. So that's why sometimes you say, I'm paying on time, but why my credit has gone down? And that is why you may have reached your maximum limit. You must have maxed out on all your credit cards, and that would be a reflection on your lower score. So if you are in the process of procuring a property, it's better keep it at the minimum. Don't use more than a certain percentage. And the next one is use a lower percentage of your available credit, lower risk, higher score. So and last time we had discussed that keeping it in the around of 35% of the credit limits works quite good, and that will keep you a good balance in there. Yes, try to use less than 35% of your total available credit. That was what they had been walking us through in the last one. For an example, credit card limit is 5,000. Line of credit limit is 10,000. Total available credit is 15,000. 35% would be around 5,250. So that is slightly a good ballpark figure where your credit score, because if you don't use it completely, then what happens? And then you use this one. So these are some of the numbers, and let's get our expert here to walk us through when it is like you don't use it and when you use it maximum. Yes, sir.
35% is definitely the right number, approximately in that range. But yeah, if you have to use more, you can, just not all of it. You don't have to use all of your credit.
Even in our last understanding, we had said don't cross the 50% mark.
I would not. No, that's yes. Way too much already.
That is way too much. So in case if, let's say, suppose you are not using, then is it affecting your credit score? Let's say suppose you're just keeping, or you're not using the any of your credit.
I suggest using at least couple to few times a year if you are not using any of your credit cards. But in general, I suggest using couple to few times a year.
Because I have come across many of my prospects or clients sometimes. They say, we have credit cards. We don't use them. So it is in their interest to keep it some transaction down the line.
Yes.
Just to keep it in roll.
Just to keep the credit active, because something I have seen not often, but rarely, if you do not use your credit at all, your credit becomes something called as beacon reject, which means there is no beacon score, no credit score, since you're not using any of your credit.
It. So it is in your interest to keep that active.
Yes. So and not a whole lot, couple to few times a year, and small amount. Let's say $5,000 credit card, you use to fill up a tank, gas tank,
and just
or
pay
buy
it off
some
in 30
groceries
days in your
and pay it
regular
off in
format.
30.
Yeah, just keep it active.
Yeah.
I would say, like you remember when you don't use anything in your bank account, they'll send you after 2 years. You're not using the bank account.
Yeah, they send you a dormant notice.
Yes, dormant notice. So it is in your interest to keep that active and keep the range between 35 up to 35. Do not exceed 50. And now let's say suppose someone has maxed out. How much credit score do you think goes down?
If you've maxed out and if it is above your limit, your score drops dramatically.
Really?
Yeah.
I mean, if you have maxed out, then the score goes down.
Yeah, dramatically.
Dramatically goes down. So yeah,
Yes.
keep. Wow. Okay. So
Yeah.
that is to be seen. Okay.
Yeah.
Next tip. Let's see. Keep an older account open. That's what we were like explaining it to you. Okay, like keep on revolving them. So because if you close the older ones, then the newer ones will have a newer the older the account, that gives much more prominence to it. Use it from time to time to keep it active. That's what we were referring you to. And example of a credit check. Okay, so what we just told you in those two things is what exactly it is. Keep your older account open and keep on using it from time to time. Now let's see what exactly it is telling us here. Example of a credit check. So this is how it will show on your credit, and it is good for you to go and get these credit checks done. And I will take you to a certain other websites where you can go and check these ones very fast. Limit the number of credit applications you make within a short time. Okay, so be very careful. Do not go out numerous times and get too many credit checks up. That also constitutes some of the red flags there. Seek credit only when you need it. Okay, so now let's get over to the next tip. Diversify with a variety of types of credit, but don't go overboard. Last webinar, our expert had given you a quite an in-depth here. Have some credit cards, have some line of credit, have some other kind of loans. So you have a diversification, just not one type of format there. How to improve your credit score? Again, if you are struggling, and we have already told you, our mortgage expert, Faisal Garcia, is an expert with credit repair, and you should be in touch with him if there is a problem with your credit. Otherwise, improving your credit score, make payments on time and in full. If you cannot pay in full, make at least the minimum payment. We have already dwelt this one, and again, we are repeating the same thing here again. If you cannot make the minimum payment, contact the lender right away and try to use no more than 35% of total available credit. Keep an older account open to help maintain a long-term credit history. Don't over apply. Seek credit only when you need it. So we are just repeating the same things and making sure you're able to do it. Diversify with a mix of credit products. Let's get back to our expert there and seek some of his expertise there. Faisal, a lot of people have said, and probably I had a discussion with you last time, and I keep on giving them this insight that if you receive a bill, don't wait for 15 or 20 days. Try to pay them off right there and then. And that will help your credit score to improve much more. Can you highlight on this particular aspect?
Yes, you're right. And I'll tell you what happens. So let's say, let me just look at the calendar and I can give you exactly. So let's just say your credit card is due on the 18th of January. It's Friday.
Okay.
Okay. And if you go and make the payment on the 18th, which is what a lot of our clientels do, the payment does not get processed and reflected on the credit card until 22nd or 23rd.
It takes some time, processing time, or
It
going from
takes,
one institution to the other. Yes.
yes, okay. And let's just say it's a TD credit card, and I'm just using this institution name because to keep it simple. Let's just say it's a TD credit card, and the bank account is also TD, coming from one to next. It still has some processing time and posting time. So my recommendation is if it is due on 18th, try and make the payment on 15th or before. So on the due date, it actually shows paid and posted.
Yeah. So I mean, 30 days does not mean 30 days, because then you overextend, and then it shows that it has come after the 30 days, and then your credit score drops.
Or at least does not help your credit score go up.
Yes. Okay. If it doesn't drop, then it doesn't let you help to go up.
Yes.
But in case if you change your format, the moment you receive the bill, pay it off right there and then, and it will always show as paid off completely, and it may boost your credit score.
Yep.
Make sense?
One tip, while I was reading one of the credit repair articles a long time ago, said that when the mail comes, have it in a place where and don't open it. Open it within reasonable time in a day or two, and the day you open it, you pay it off right away.
Okay, makes much more sense, because that will help you to improve the credit score.
Yes.
Wonderful. Okay, let's see. We are almost at the last leg of this particular article. Let me go there, and let's see. Checking your credit report. Okay. Mistakes in your personal information. So yes, and you should order your credit report. It's free. I am going to give you a few websites immediately after this one, so that you can get your credit score for free. And I'm also going to discuss that with the expert, because I've found one or two more places where you can get it for free. Check out any mistakes in your personal information. Errors in credit card and loan accounts, you should check those ones up. This is your it's very important aspect, because if anything goes, online hacking is very common. It is very much in your interest to check these stuffs and things like that. Negative information listed for too long, you should be pointing that out and getting it fixed up. Don't wait till you actually go and look for a loan. Try to get it addressed beforehand. Accounts you did not open, very, very important. Once you should be able to, and in my last emails, I have sent you how easy it is to procure these particular credit reports and scores, and even these particular PDFs have walked you through step by step how to read these particular ones. So you should be able to see errors, mistakes, negative information, accounts you did not open. Those things are there, and you should pay a very close attention. It is in your own interest to do that. How to correct errors in your credit report. Dispute incorrect information. Correct errors to avoid negative consequences. Very important. Follow the credit bureau's procedures. We will give you all 800 numbers. You can easily go there and procure those ones. And if you are running into a problem, call the expert there. He has done wonders for many of the clients. He'll be able to guide you there how to get it fixed up and what all procedures will be there. If needed, add a consumer statement or fraud alert. I think so you may have to pay for it, but it is worth its while. Let's get to the expert there. Dispute, correct error, follow credit bureau procedures. I mean, people have a challenge in calling the bureaus and getting it redressed. Can you put some highlight?
Um, so dispute and errors. Uh, this can this can take a toll on your credit bureau. What I mean by that is, let's just say you made a payment, it didn't get posted on time, and it looks like a late payment, but it was never late. That's an error. You have a very common name, and someone similar to your name or maybe exact name has a credit card that shows up on your credit bureau, and they're not making payments to their card. There are
Very
some
true.
households where I've seen, and I'm just taking this name for, example purposes. First name and last name is same of the father, and the son has the same first name, last name with a junior at the end.
Oh, okay.
Okay, in some cultures that is common. Now, if son is not making payment to the cell phone bill, it's getting posted on father's credit bureau
Same
because
address,
same
and
address, same
someone
name.
has goofed up the date of birth.
Yes.
Okay.
Okay. Sometimes date of birth doesn't even matter. It's a credit bureau that's merged, and we have a special procedure to get it separated. But
Okay.
it's like solving a problem after the problem is
Has already
there.
occurred. Yes.
Yes.
Okay.
So there's multiple reasons why your credit bureau can be low, even though
You haven't
it's
done
not your
anything.
mistake.
You haven't done any mistake. Awesome. Awesome pointers. Okay, let's get back here, and we are almost example of a fraud alert. Okay, and how to order your credit report and credit score. Credit report by mail, telephone, and in person, free of charge. I will point out that the main two highlight companies, Equifax and TransUnion, you can get the credit report for free, but you have to pay for credit score. But I'll give you 3 or 4 other places where I've been able to find that you can get your credit score for free. So just bear with me for a moment and I will take you there. Credit report online costs money. Okay, and credit scores usually cost money. So most of the time you should be able to get it for free, but in case if you're in a hurry and you need it, sometimes it costs money there. But credit score usually cost money from the 2 major companies, but there are various other companies that are doing it for free. Contact information, you have 800 numbers for Equifax, equifax.ca. Go there, you should be able to get it done. Again, transunion.ca, should be able to get those addressed. All the information is there. Equifax application. Okay, now I think so this is almost to the conclusion of our workshop, and so I'll just head fast and then I'll take you to where you can obtain all of these ones from. TransUnion application is there. You can get the credit reports for free. And now we are summary of part 1. Credit report, summary of your credit history. Credit score shows how well you use your credit. 3-digit numbers between 300. So this is like from part 1 and part 2 today. We are trying to wrap it up and we'll just go through this fast. Lenders use your report and score. Are you a high or low credit risk? Negative information, we have already explained you, remains on the credit report for a fixed length of time. There were various formats there. To improve your credit score, make payments on time. Again, at least pay the minimum payment. Contact the lender if you cannot make the minimum payment. Try to remain below 35% of your available credit, and keep an older account open to maintain history, and don't over apply for credit. Diversify. And summary of part 3 is check your credit report at least once a year. That should be absolutely a major thing that you should remember. And so that order your report from each credit bureau. look for errors and identity fraud, credit reports, order for free by mail or telephone, pay to order online, usually pay to order online, and there were some, and that brings us to the conclusion of this particular one. And let's head over to our expert there about conclusion of our 4 webinars for understanding the workshop, understanding credit report and score, and the workshops. So what do you have to say about this one? It was quite a deviation from our normal path.
It was quite a deviation. However, it's a very important deviation that's absolutely needed. And when you have good credit score, you don't think of it, that it's an essential part until there is a problem and you realize how important it is. Because mortgage is one of the biggest loan you get in lifetime for most people. And that's a loan that's coming from the bank that want to make sure that you are worthy enough to be lent that, because no institution out there that lends money, in fact, no lender that is lending money on a property as a mortgage is interested to take on your home. It's really not their business to take anyone's home. They want their monthly payment and the interest that they will collect on it. That's their primary goal. That's their business model. That's what they're in business for. So having a good credit score is something they absolutely look for.
Awesome. Okay, so now let's head to give you all these ones. We have already told you that the credit report by Equifax and TransUnion is free, and you will have to pay for the credit scores. So you can go to these websites. All of these links are in the description of the live stream. And Equifax, you can obtain your credit report. Again, request to obtain your credit report from Equifax. Again, you can do it similarly from TransUnion. Now we are heading to 4 places where you can get your credit score for free, and then we'll take our expert advice on those particular ones. So this is most common one, which I keep on referring to a lot of people, that go to Credit Karma. Your credit score should be free, and now it is. So you can get a good idea about your credit score from Credit Karma. Then you can also go to borrowwell.com and obtain your credit score for free credit score and reports. So get my free credit score. So from Borrowwell also you can get your free credit score. Now I have been also able to get 2 more places, and one is ratehub.ca, and from there also you can check your free credit score. So I had emailed all of you that from this one another place that you can get your free credit score. So and this is again, it is showing that you should be able to get your free credit report and score both here. The last one here is Mogo, and let's see what mogo.ca has to say. And again, you can get your free credit score here. Now Mogo has partnered with Equifax, the largest credit bureau in Canada and the one used by many banks and finance companies to monitor your credit score. So I will have to take some info from the expert there, but yes, you can get your free credit score from this one. So let's head over to the expert. These are 2 more places that I found. Have you come across these 2, RateHub and Mogo?
Mogo, I have heard about it,
Okay.
and I've seen a client use it. It's pretty stable. RateHub, I have not. So that is something I will put on my project for this week to explore.
Wonderful. So
either way, all of these companies, they are out there helping clients sort of see what their credit scores are. So
Yeah, go ahead.
yeah, in general, keeping an eye on your credit score is definitely a good idea.
Yes, that is what I'm saying. Like, see, you you can pay in case if you find something is wrong, but the basic preliminary, you can always go ahead and check up at these 3-4 places and get a feel of the idea where your credit score is. And then in case if something needs to be, you are more serious into purchasing or something, you can go and procure with a paid one. But yes, you should be able to get a basic idea from these particular ones. Okay, so now let's see where we are heading. And it is almost 8 o'clock, so I am going to wrap up with this last particular one. And okay, ladies and gentlemen, this is the booklet that we had started with, Home Buying Step by Step by Canada Mortgage and Housing Corporation. And we had taken you down this road, and we had completed 3 chapters in there. When we had to deviate, step number 1 was, is home ownership right for you, which we completed in one of our webinars. All of these webinars are on our website. I will take you there so that you can have a look at that one. Step number 2 was, are you financially ready to own a home, which we had completed. And again, then we went over to the next workshop. Next step, that was financing your home, and that is what we had done. And when we were on this particular one, that is where we had come across know your credit score, and that took us a detour there, and we had gone through the understanding part 1 and part 2, then workshop part 1 and part 2, and now this concludes our home buying step 3 incomplete. And next week onwards, we will be taking you over to finding the right home. So this is our agenda for next week, and we'll be going through the guide step by step, finding the right home, and we will take you there. And this is the website that has everything in place there. So all of these descriptions are in there, and you can go there and see all of these webinar, the previous videos and the upcoming videos and the ones which have just completed. They are all there on this particular page. You should be able to get yourself ahead for any of these older ones. And we are concluding it for today. That is the first webinar of the year 2019. Hope you found some information which was of use to you, and feel free. The expert is there. His website is faisalgarcia.com. So his name, you can see his name here, faisalgarcia.com, and creditrepairnow.ca. So on those two, you can get in touch with him right there and then, and he'll be more than happy. And he's doing quite an expertise with credit repair these days. And some of my clients are getting way ahead in this particular format. So take advantage of him and procure in case if you are dwelling into real estate. I'm there, and I'll be more than happy to put things together for you. Go ahead regarding our first webinar of the year, Faisal.
Sir, congratulations to you for putting this together. There
Appreciate
are multiple pieces, and I want to mention this to our audience, that doing a webinar takes a lot of effort. It's almost like you're walking the maze with multiple pieces that you need, and you need every piece to work right. And when it doesn't, technical challenges come in, and there's a lot of information that sometimes can be overwhelming, where you have actually dissected and put together what's needed, step by step guide, credit repair workshop, so on and so forth. So there's a lot that goes in. So I'm hoping that the audience finds it interesting for themselves and important, that they get some sort of a piece of advice that they can take and use towards their home buying search, and so on and so forth. So again, congratulations to you for putting it together.
Really appreciate
It's
you.
not an easy task.
Appreciate your and you being there. It is like we too are putting those helpful tips. I hope it reaches across. And as we have told our various audiences in our various webinars, we are there to address the worst case scenario, that is the rent to own homes. And feel free, any question, any query that you have regarding real estate, I am here. Regarding mortgages, the expert is there, and we are here to take you to the next level. So on that note, we'll conclude our first webinar of the year. We are here every Monday, 7 to 8 p.m. Join us, and we look forward to meeting you next week, Monday, 7 p.m.
7 to 8 p.m. Eastern Standard Time.
Awesome. Perfect. It is awesome, sir.
Thank
Really
you very
appreciate
much.
your time. Thank you again.
Thank you very much.
Audience. Thank you, everyone.
Bye-bye.